Since start of this week, it was mentioned that for this week Nifty futures holding above 23,750. Immediate target come pullback resistance will be at around 24,250, below which upside is capped. Once 24,250 is held, index can witness short covering and index can even extend pullback towards 24,800. And these pullbacks can be looked as an opportunity to reduce leverage bets. That's the outlook which we have been sharing since start of this week. And we have seen that from the lows of 23,750, the index managed to sustain above that level, and yesterday finally it tested the highs of 24,200 plus levels. On 31st of December 24, when the index was opening gap down at around 23,600, it was mentioned that the data study is indicating sharp pullbacks too, and the index can end up being in a range between 23,500 and 24,250 before giving up a further directional breakouts. So yesterday the index Nifty spot witnessed a sharp up move and tested the highs of 24,226 before ending the session at 24,188. The index has filled the gap which was created on 19th of December on a daily charts, which is a good sign for the bulls as a whole. And today the weekly closing will be important in order to signal further directions in short term time frame. Overall, the bias remains reduced leverage on pullbacks towards major resistance levels given at 24,250 and 24,850, as lower lows cannot be ruled out. While in short term bias remains valid, that trading above 23,800, indexed 24,250 is important, and once that level is being held, even the higher extension pullback towards 24,850 cannot be ruled out, which will act as a major target come resistance for this series. For the day today, 23,980 Nifty spot will be important, and dips towards it can be initially looked for fresh trading longs. Bank Nifty ended last session at 51,605, underperforming Nifty 50 index, and their 52,000 52,500 zone is still pending to be tested. Overall, Bank Nifty remains in a range. If we see yesterday's movement on day of weekly Nifty expiry, the top performers were heavyweight counters. The sectors like auto, NBFCs and IT gained substantially. Auto was up by 3.74%, NBFC was up by 2.07%, and IT was up by 2%. A day before, we have recommended buying in auto pack, where our top bet was Eicher and M&M, while Maruti was for the pullback. So these counters have performed well. If we see the OI data now, once again the positive build-up is there in Reliance. It's more or less the same pattern which we have seen earlier in Adani, and thereafter we indicated the same in Nifty, that the pullbacks can be sharp and there is some kind of positive build-ups, and this was a view which we have shared on 31st of December and later on also. So the indices are showing some the broad strikes, which is not very rational, because as historically this kind of strikes spread is not visible. For example, if we talk about Bank Nifty, which is trading currently at 51,605, the OI data indicates that maximum call buildup is at 48,900 and the maximum put buildup is at 54,700. This is not logical, this is not very rational, because deep in the money call and deep out in the money puts are has the maximum OI buildup, which is a clear sign that the volatility is going to be very, very sharp and high, dips of 1,000 points and pullback of 1,000 plus points. So initially this week we have mentioned the same, that this series can be a month of volatility, and I believe that this volatility will continue both ways. So downside sharp cuts will also be there, and the pullbacks will be equally strong, the way we have seen yesterday. We have to look to reduce the leverage long positions, because if we still trust the weekly charts pattern, we believe that though the index is forming higher highs over and above 23,500 mark, but the shorts are still in system, and that short need to be covered only once Nifty sustains above 24,850 25,000 zone. In that scenario, the index will be open towards another 1,500 points upside. So initially, as per the rule and the discipline, the pullback towards 24,850 25,000 mark should be looked to reduce and deleverage the positions. The weekly closing is important, as mentioned. The global cues are not very positive, and even the the logics on the basis of which the index has moved up yesterday is not very strongly convincing. But yes, as per the price study, we have to follow the rules that holding over and above 23,750, 24,250 was a target come resistance that has been hit yesterday. So now weekly closing over and above 24,200, 250 levels in spot will be further a positive signal indicating that the index can even accelerate up in days to come. So 24,200, 24,250 will be the important level in days to come for Nifty spot to be watched. While in respect to the Bank Nifty, as mentioned earlier also, it has been within a range since last 6 months, and that range still continues, and within that range 52,000, 52,500 will be important level to watch. As per the data, I believe that there is some positive developments in Reliance as mentioned. Other counters like Infosys and all, we are heading towards the result season, but Infosys we have mentioned that there will be sharp moves upside also, but 2000 odd levels has a strong build up, so that level indicates some kind of short build up. So current price for Infosys is at around 1958. Move towards 2000 odd levels can be looked to position oneself on the downside biased with a bearish strategy, something like that can be looked into Infosys. Rest we will be looking for buying in Reliance at the lower levels, because the Y development has been quite sharp and positive also, but at the same time Reliance has a very strong resistance at around 1300 mark. But we can see even the build up at around 1400 and 1500, that is too deep in the money data. So it's a bit contradictory and confusing also, but overall if we see, then at priori we can see that it shows a strong volatility ahead. Swings of 100 points cannot be ruled out in Reliance either ways. As per the price study, since things are oversold, we are betting on the positive side only. So let's see how market unfolds from these levels, but overall the market is going to remain volatile. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.